Salutations, 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 everybody. For those who don't know who I am, my name is Timothy Lee Rogers Sr., and I'd like to welcome you to Learn to Trade Futures with yours truly, Lil Timmy Rogers. Again, welcome to Learn to Trade Futures with Lil Timmy Rogers. This is part 1. But before we get into it, if you have not watched the intro video, please do so. Please go here. It's either here or here, wherever they put the cards at. I never know what side it is. It might be this side. It might be that side. Whatever side it's on, please go there and watch that video and then come back to this video and continue, please. Go watch that video. Go watch it. Let's get into it, man, because I know if you haven't watched it, I know you ain't go back and watch it. So let's just get into it, man. Again, this is Learning to Trade Futures Part 1. What are futures? Read together with me, if you will. Futures, a legal agreement, contracts to buy or sell a commodity or security at a predetermined price at a specified time in the future. Hence, futures. There are all types of futures that you can trade. You got commodities, you got bonds, indexes. I choose to trade indexes, the ES to be exact, the S&P 500, if you will. But I choose to trade index. You know what? I found out that you can actually buy livestock using futures. That blew my mind. I did not know you can do that. That blew my mind. Now, who uses futures? You have speculators like myself and probably yourself. And 99 to 100% of the other people you see on Algo's internet saying that they trade futures, they're speculators. What are speculators? We bet on the future price of some asset or security, meaning if you think it's going to go up, you buy. If you think it's going to go down, you sell. You're capitalizing on or profiting, if you will, off the volatility of the market going up and down, up and down. Then you have hedgers. Hedgers, they lock in price today to reduce market uncertainty in the future. Now, who would do such a thing? You have producers that make items. You have people that actually buy commodities. They actually buy oil, animals, wood. They actually buy this stuff. Then you got people that create stuff off of the materials that they buy. So they use futures to avoid market uncertainty. For example, if they think the cost of a widget is going to go up by December, then they will say, hey, I'm going to buy these futures contracts to say I will buy my widgets at $3 per widget. Right? And then in December, if the price is $5.50, they're saving $2.50 per widget because their contract says that they will buy it for $3 per widget at a specific time in the future. So that's hedgers and that's speculators of trading futures. Moving right along. How can you trade futures? Right? First of all, you need a brokerage that is eligible to trade futures. Not all brokers will allow you to trade futures, but you have to do your research. I'm not here to recommend a broker. I will share with you the broker that I use, but I'm not here to recommend brokers. So do your research on your brokers to see if they allow to trade futures, to see if they are a discount broker, meaning they allow you to trade at a small fraction of the cost to day trade the futures. Now, let's talk about margin. This confused me for a long time when I first started trading futures, right? Because margin in the stock and options world is like it's a loan. You're borrowing money from the broker to enter a position. But in the futures world, margin is just the percentage of the price of the purchase price that must be covered by cash or collateral when opening a position. So you're not borrowing money. It's just the percentage of the purchase price that you have to have readily available in order to enter that position. That's the initial margin. And then you have something called maintenance margin. That's the amount of equity you got to hold in your account to after you make the purchase to be able to keep that position open. If it drops below that, you would get what's called a margin call. They'd be like, hey, you need to add more money in your account or you need to close this position, right? So again, margin in the future world is not a loan. It's just the amount of capital that you have to enter the position or hold the position over time, right? Now, let's get into the platform I choose to use, right? I choose to use the NinjaTrader brokerage. They have a brokerage firm, they have a platform, they have software. It's a one-stop shop. That's why I chose them. They are a discount broker, and I'll explain what makes them a discount broker in a second. But this is not a recommendation. You don't have to use NinjaTrader. You can use Tradeovate, they're a discount broker. You can use TradeStation, they are not a discount broker. You can use what's the one, TD Ameritrade. I think they might have got bought out, I don't know. But do your research on brokers. That's not a recommendation on any broker, right? These are the fees as of now dealing with NinjaTrader. When I download the screenshot, subject to change, because back when I started using NinjaTrader, I bought the lifetime license because I don't like paying bills. I'm not going to do a month-to-month thing. So I bought the lifetime license. At the time when I bought it, it was $10.99. I got $100 off because I did it through Jada Trader's course. And so I got it for $9.99. But today it's $14.99. You know, inflation, things go up. People start getting popular. So the price go up, right? Yesterday's price is not today's price. You hear me? So these are the prices if you're interested. Now let's get into what it means to use a discount broker, right? So what it means to use a discount broker, if you will, if you look, I don't know how well you can see it. These are just some examples of some instruments. The first one here is the ES. This is the one I choose to trade, right? So the initial margin, remember the initial margin is the percentage of the purchase price that you need to have readily available to enter the thing. So enter the contract. So the initial margin of the ES, the E-mini S&P 500 to buy one contract is $12,320 per contract that you got to have available to enter the position. Now, every broker will have what they call day margin, intraday margin, right? And intraday margin is the amount that the broker requires you to have to open a position just during regular business hours, right? Well, you know, during the day. You can't hold it over the break. So from 6 p.m. Eastern Standard Time up until 5 p.m. the next day, you have the opportunity to open a position, and you have to close it before that break to qualify for the intraday margin. When you're using a discount broker, they typically have an intraday margin that's far cheaper than a non-discount broker. For example, to trade one contract of the E-mini on NinjaTrader is $500. If you're going to do it on TradeStation, I don't have the exact numbers, but I think it's somewhere around 12% of the initial margin for their intraday. So every broker has an intraday margin, but for a discount broker, it's usually going to be around $500 to trade a E-mini, around $1,000 to trade a NASDAQ E-mini, and around $500 to trade a Dow E-mini. It's going to be a lot cheaper. And if you got a non-discount broker, it can be anywhere from $3,000 to $5,000 to $6,000, depend. It may be 25%, it may be 50%. I think it's 25%, but it's going to be anywhere from like $3,000 to $5,000 to $6,000 to enter one contract. So do your research on the brokers and figure out if they're a discount broker or not. Also, if you do not have the initial margin in your account, you should not be trading that instrument. That means you are severely over leveraging if you don't have that initial margin. And even though you don't need it in your account to trade it, you are over leveraging if you are trying to trade that instrument and you don't have at least that initial margin in your account. Now, when it comes to what a beginner should be trading, I recommend the micros, because the micros will be 1/10 of what you see the minis are. So for a micro ES, the S&P 500, it would be $50 intraday margin for Ninja Trader, and it would be $1,232 for initial margin on Ninja Trader, right? It'll be 1/10 of whatever the mini is for the discount brokers. Right now, let's move on to the charts, because I know you say, Tim, you're saying all this about trading futures, and everybody else that talk about trade, they don't be talking about no margin, they don't be talking about no brokers. They just open up this thing they call a chart, and they have all these squiggly lines on it, and I don't know what I'm looking at. Now, you have many forms of charts where you can watch the price of the futures or any other asset you choose to trade, right? The chart is just showing you the movement of the price, right? The chart type I choose to watch, the chart type I choose to watch is the candlestick chart, right? So the candlestick chart is a type of price chart that displays the open, high, low, and closing prices for a specific period. The open, high, low, close, right? Notice I said for a specific period. And why do I say that? Because candlestick charts are going to look the same no matter what time frame you're looking at. But you always have to remember that each candle is showing you the open, high, low, and close for that time frame. So if you're looking at a daily chart, each candle represents one day, and it's showing you the open, high, low, and close of each day. One candle is showing you one day on a daily chart. If you're on an hour chart, each candle is showing you the open, high, low, close for 1 hour of time. If you're on a 1 minute chart, each candle is showing you the open, high, low, and close for every minute. Now, the charts will look the same, but the candles will look the same, but you got to understand what time frame you're on so you can understand what each candle is telling you, right? Each candle is only showing you the open, high, low, and close for that time period, but you always want to be aware of what time frame you're on so you know, is each candle showing me a day? Is each candle showing me a minute? Is each candle showing me 15 seconds? You want to know what time frame you're on, right? Now, I know you're saying, Tim, you're telling me it's showing me the open, high, low, and close for that specific period. But when I look at it, all I see is typically these green and red boxes with these little sticks on them, right? I'm glad you said that. Let's get into it, right? What do candlesticks tell you, right? Like I said, it shows you the open, high, low, and close. The green candles show you that. It shows you the open, high, low, and close. The red candles show you that, right? Now, what is the difference between the two, right? I know you say, hey, the color, not just the color, because on platforms, you can make these candles any color that you want, right? So instead of saying a green candle, get into the habit of saying an up close candle. Why? Because the candle closes above the price that it opened, right? It closes above the price that it opened. So this is a up close candle, right? And get into the habit of saying a down close candle. Instead of saying red and green, just say up closed and down closed, because for all intents and purposes, a green candle or up closed candle, the closing price is higher than the opening price. And with down closed candles or red candles, the closing price is below the opening price. So up close, down close, right? That's the only difference between the candles. They look and they tell you the same information, but you know, at some point in time, this green candle opened here, right? At some point in time, it went as high as this, right? The wick show you the highest price it went to. The open shows you the opening price it opened at. The high show you the highest price it went during that time. The low shows you the lowest price it went during that time. And then the close shows you the price where it closed at that during that specific period of time. Right? Same thing with the down close candles. The opening price shows you the price where it opened at some time during that time. The high, the wick, the top wick shows you at the highest it went during that time. The bottom tail or bottom wick shows you the lowest price it went during that time. And then the close shows you the price that it closed at during that time. Right? Did I confuse anyone? Hopefully I didn't. But rewind it, pause it, take notes, whatever you got to do. Let's move on. Right? Now, all elements of price action has an open, high, low, and close. Let me say that again, right? This is very, very significant. The significance of the open, high, low, and close, right? All elements of price action has an open, high, low, and close, right? If you're looking at years charts, you got an open, high, and low close on the year. You will hear many times people say a 52-week high, a 52-week low. The yearly open, the yearly close, open, high, low, and close on the month, the week, the day, sessions. Different sessions. You have an Asian session, a London session, a New York session. The sessions have open, high, low, and closes. Like I told you, hours have minutes, seconds. Every candle has an open, high, low, and close. And depending on the chart time frame that you're looking at, each candle is going to represent a year or a month or a week or a day. It's going to represent an hour, a minute, a second, right? The sessions, however, they're going to be involving multiple candles. So if you're looking at an hourly chart, depending on how long the session is, it's going to be a lot of hourly candles during that time frame of that session. You get the picture. So every element of price has an open, high, low, and close. Now, we're going to have some homework. Now, we've discussed what futures are. We've discussed how you trade futures. And we've discussed looking at the price on candlestick charts. Now, we're going to have some homework. It's very simple, but it's going to focus on the importance of the open, high, low, and close, right? And it's also going to start to give you a little future look into time. Right? Time and price. We're going to be talking about time and price throughout this series, right? So what's the homework, right? I want you to go back through price, right? I choose to trade the ES. If you want to follow along with me exactly throughout this, use the ES, right? Use the ES. Go to your platform. Right now, we are currently on the December contract, right? And it depends on which platform you use. Some platforms do it as ES 12, 23. Some of them do it as, most do it as ES Z as in zebra 2023. Some of them do it as ES Z as in zebra 23. It depends on, that's the current contract. It depends on how your platform does it, where you can find it. I like to chart on TradingView. It's free. You can get a free TradingView account if you just go to tradingview.com and sign in for a free account. You can look at the charts. And on TradingView, it's ES, and it'll be Zulu for the December contract 2023. Right? So you got it's H for March, M for June, U for September, and Z for December. Those are the 4 contract dates throughout the year. And right now we're on the December contract, and so is Z, right? So go back through price, right? I want you to go back through price, and I want you to mark out the open, high, low, and close for each day, right? And when you mark out the open, high, low, and close, I want you to go back 1 month back up until the present now. So go back 1 month and then mark out the open, high, low, and close for each day. And after you mark out the open, high, low, and close for each day, I also want you to mark out the open, high, low, and close for the New York session. Now, the New York session is from 9:30 a.m. to 4 p.m. I know you're probably looking like, Tim, I don't know what in the world you are talking about. Don't worry, I'm going to help you out. I'm going to help you out. I'm going to show you what I'm talking about. Then I want you to go back through and do this homework for yourself. Now, here we are. Here is a chart for the ES. And if you look over here, it says we're on an hourly chart, 1 hour. So each one of these candles right here represents 1 hour in time. That one is an hour. That one is an hour. That one is you get it. Every candle on here is representing 1 hour in time, right? Go to 1 day. You can type in 1D on Trading View, or you can come over here and just click on this D right up here, right? For the time intervals that you want to select, you can just click on that D, or you can go and just type in 1D and press enter and get. Now, each one of these candles represents that's 1 day, that's 1 day, that's 1 day, that's one. You get the picture, right? So if you want to mark out the daily high and low, right? How we going to do that? If you want to stretch it wide, you grab the dates or the time at the bottom, right? And click and hold and move it left and right. If you want to stretch it tall, you grab the price, click and hold and drag it up and down, right? So now I have a shortcut. I got a favorites bar here. If you click this little star, turn it blue, click that little star and turn it blue there. I'm just checking to make sure y'all can still see my screen, right? If you look right over here, you'll see my favorites bar come up and disappear. Now, this is my tools favorite bar. The tools are over here on the left side here, and you can go in and you want to pick a trend line tool, right? But I have it on my favorites bar, but you want to pick a trend line tool, right? And once you pick the trend line tool, if you have the snap on this magnet over here, it got it set to strong. If you got the snap, if it's highlighted blue, it's going to snap. Let me show you what it does. Get some crosshairs so you can see. When you got the snap on and then you pick the tool, you see how the arrow is like that line is snapping to the, like every time I pass by a candle, it snaps to the wick, snaps to the body, it snaps. So that's what the snap tool does. It snaps to the candles and the wicks. So got the snap on, and you're gonna go 1 month back through today. So we're gonna go back 30 days, right? The last day was September 22nd. So we're gonna go all the way back to August 22nd. There's August 22nd right there, right? So you're gonna start at August 22nd and come all the way back through to the present, and you're gonna mark out the open, high, low, and close. This is August 22nd. Right here, if you look at the bottom of the screen, as I hover over the candle, it shows you the date. It says Tuesday, August 22nd, 2023, right? August 23rd, August 24th, August 25th, August 28th, right? Because it goes from Friday to Monday, right? They don't show it's a small window of trading on Sundays, but that's included in the Monday's candle. So what we're going to do, we're come here to August 22nd, and we're going to come to the top of the wick, right? Click there. If you hold shift and stretch out, you can just stretch out to the next candle. You don't have to stretch it way out over here, but just stretch out to the next candle. Click there, right? Let me spread it out more so you can really see what's going on. And let me make these bigger, right? So on TradingView, if you don't know how to use TradingView, once you click on the line that you made, it'll show you. You can double click on it, or you can look at the little shortcut menu up here. But if you double click on it, it brings it up for style and you can style it, right? You can choose the color, you can choose the thickness. I'm going to thicken it up a little bit so you all can see it good on the screen, right? You can see the cut. You can change the opacity, you know, if you want. Pick the color that you want, right? So we can put, you know, black. If you want your high to be green, right? And your, you know, so you'll make that the high, right? And what I did, I held control. Let me show you how to do that, right? If you don't want to, well, we're not going to get into all of that. So you're just going to mark out the open. That's the high, right? I got the trend line instead of, the ray instead of the trend line, right? Click on the low, pull it over, right? Say you want to make the low red. You don't have to pick these colors. You pick whatever color you want, right? And then remember, on the down close candle, the open is at the top, right? See, we're gonna make the open. I'm gonna make the open orange. Open orange. You don't have to do this. You can make this all black if you want to. And if you're wondering why it's going behind there, it's because the lines are over here in the side menu here. The ES, that's the chart. It's on top of the lines. If you bring the lines above it, now when I click there, you can see the lines in front of the candles, right? And then the close, we're gonna say close. We're gonna make the close blue for cobalt. Cobalt blue for close, right? So now that's the open, high, low, and close for the for that day, right? The open, high, low, and close for that day. Now let me show you a trick. When you're marking the chart on TradingView, right? When you put the whatever time frame you're on, if you right click and it says visibility on intervals, if you click on current interval and below, it will only be visible on that time frame and lower. The higher you go, you won't see the lower time frame information. So we're going to do that. We're going to click on current interval and below on each one. You can do this all in one step. I should have told you that earlier, but you know, this is about charting. This is like charting stuff here, right? So you just right click on the object that you created and you hit current interval and below. Now, so now let's go. We're going to go all the way down to a 1 hour chart. Type 1H or just come over here to 1 hour, right? Type 1H and press enter, right? Now I got to get everything back in the screen. Find the lines that I made. These are the lines that I made for that day. There they are, right? For that day, I encompassed. Now, if you look at hourly candles, right? So hourly candles, we went from the beginning of the 22nd, which is 6 p.m. on the 21st. Remember, I told you it starts at 6 p.m. at night up until 5 p.m. the next day. And we stretched it over to the next candle, so it moved all the way over to 6 p.m., right? If you want, you can just click, hold shift, and just move it back one candle to take you there to 4. And that 4 o'clock candle goes from 4 to 5. On TradingView, it gives you the time for when the candle starts. You don't have to move this back to the 4 if you don't want to, but right. So now, if you notice, right, on the daily candle, it was only one candle, right? There was only one candle on that daily candle. Now that we've come down to hourly candles, right? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. There are 23 hourly candles in a trading day for the futures. Because remember I told you it goes from 6 p.m. until 5 p.m. the next day. There are 23 trading hours in one futures day. When it comes, well, futures contracts day, not contract, but futures instruments day, right? So now you got 23 hourly candles here. Now, what time did we say the New York session was? We said the New York session ran from 9:30 until 4. Now, notice you come here and we got it on hourly candles, right? And on hourly candles, you say, hey, Tim, how can I get to 9:30 if I'm on hourly candles, right? Now I'm taking a vertical line tool. I'm marking out the 9 o'clock time frame, and then I'm coming over here and I'm going to 4 p.m., right? 4 p.m. Click there. Now you say, Tim, how do I get to 9:30 if I'm looking at hourly candles? So what you want to do, you want to go down to a 15-minute chart. Anything less than an hour, right? So a 15-minute chart, type 1.5 and it's going to come over 15 minutes, or you can just come up here and click on 15 minutes there. Go to anything less than an hour, right? Click on a 15-minute chart. Let's get it. Got to move it all back into screen so we can see it. Here we go. All right. 15-minute chart. Now each candle represents 15 minutes, right? Every candle you're looking at now represents 15 minutes in time, right? Let's keep the daily high in there, right? So that's the daily high. Oh, and you can also mark these. You can also put text on these also, right? You can put daily high 8, 22, 23, and you can decide where you want to put it. And change the color to black, right? You can decide where you want to put it. You put it at the middle. You align it to the right. You can align it. You can put it on the top, wherever you want to align it, right? Wherever you want to align it. You can center it. So I'm just going to put mine in the middle, and we're going to center it, right? I guess I made a line twice for some reason. Did I copy? I think I might have. Oh, I did. I copied it. I copied it earlier. So then we'll go here and put. Now you don't have to do it like this. Daily open 8, 22, 23. You get the gist of it. All right, you get the gist of it. Now, you don't have to mark everyone like that. So now, we said the New York session opens at 9:30. So now let's move over to the 9:30 candle, right? This is the 9:30 candle right there. Move it over so we can actually see the candle, right? That's the 9:30 candle there. So what you want to do, you want to mark out the open. So at 9:30, we open here, this down close candle there, open there, and you can just pull it out as far as you want to pull it. You don't have to take it all the way to the end. You just pull it out as far as you want to pull it. Hold shift to keep it straight. So that's the open. All right, so I'm just gonna put New York open, New York open, 8, 22, 23. All right, so the open, you want to look for the high. And so during the New York, you also see that we don't have anything that's any higher than that, because if you look at this candle here, look at these prices: open, high, low, close. Right up here, look right over here. When I hover over this candle, the open is 44.7825. The high is 44.7825. So this right here would be New York open and high for that day. We don't have anything higher. Open and high for that date, right? So the open and the high. So you're going to find the lowest point that it went during the New York session, right? And the lowest point it went during the New York session is also the daily low, right? So on this one here, you could have it the daily low, daily, and New York low, 8, 22, 23. All right, so we can mark that one like that. This is a good example to go with, because you'd be like, hey, Tim, what do I do in this case? Right? I know these words are like mad small. Let me make them bigger so you all can see them. So sorry. Making this video a lot longer than I really wanted it to be. But we got to, I'm doing this for this is for the beginners. All of this is for the beginners. And then I'll go ahead and put the close on this one here. Now, we don't need these. I'll just use them lines just to break out the time for you, to show you the time. So now we have the New York open, right? And this low ended up being the New York low and the daily low, because on this day, that's the lowest price went. And this is the lowest price during the New York session. And put those lines back just now. So during the New York session, that's the lowest price went. Right now we got the open and the high, we got the low, and now we got to find the close. Right, so this is the last candle right here for nope. We got to go all the way to the close. We put it on the 4 o'clock candle, so we got to go all the way to the close. So that is the last candle for the New York time right here, the 4:45 candle there, because this is the start of the next day. So I just put it at the start of the next day. So this is the last candle for the New York. So the close of this candle would be right there. This would be the close. We just stretch it out a little bit there because it's running into the next day, but that's fine. And that's going to be, our close is going to be cobalt. So we're going to say New York close 8/22/23. Right? So we got we have our open, our high, our low, and close for the day. And we have our open, our high, our low, and close for the New York session. Right? Now, like I said, I don't need the lines blocking it out anymore, unless you just want to leave them in there for your New York time. You can leave them in there just for visibility's sake, right? Then we can go back to a 1 hour chart to give us, a little more wiggle room. Give us a little more wiggle room with the, there we go. So now, and so we have that day marked out, right? We have that day marked out, and now we've identified the open, high. Now, when you get better at it, you won't have to go up to a daily chart to identify the open, high, low, and close of the day, because now you can see here that during this time frame, so during this entire day, right, from here over to here, you see this was the highest point, right? You see this was the opening candle at 6 o'clock. Let's make a mark out daily open, right? So you got the daily open coming all the way over here to, this is the last candle there, right, on the day. It's the last candle on the day right there, right? So you have the daily open, you have the daily close, right? You see this is when we opened. This was the highest point we went throughout the day. This was the lowest point we went throughout the day, right? And then this is where we closed on the day. Now, I know you said it's not touching the candle right there, but they have something called a settlement price, right? You have something called a settlement price. And if you look at the daily candles, right? If you look at the daily candles, I'm glad I'm going through this because it will confuse people, right? It can confuse people. Now let me hide all of this stuff real quick I'm glad I'm talking about this because it's going to help some people out. Right now, if you look at these candles, and over here you have something that says set, right? And set is used settlement price. The settlement price is when the New York market closes at 4:30. At 4 o'clock. When the New York market closes at 4 o'clock, what was the price at that 4 o'clock close? And that's what used the settlement price is for the daily candles. Now the futures market don't close until 5 p.m. But so if I uncheck the use settlement price, watch, the candles are going to adjust. See how the candles adjusted, right? And looking at the candle that we're specifically looking at, we're going to put a arrow on the close for that candle right there. Right now, watch, when I use the settlement price, it's touching that line. But if I uncheck the settlement, that's where the price was at the 5 o'clock close. At the 5 o'clock close right there. And if I drop down into, put a second line there. Put a second line there, and we're going to drop down. Going to a 15-minute chart. Right there. See, the price is right on the top of that 15-minute chart right there. Right, that's the price. That's the price at the 5 o'clock close for the futures 5 o'clock close, right? But for the daily candle typically uses the settlement price. Like at the New York close at 4 o'clock, they use the settlement price at the New York close. And if you look here at 4 o'clock, that line is on the close of that 4 o'clock candle right there. That's the settlement price. So for the New York close, that's the settlement price right there. It's at that 4 o'clock candle. It closed at that 44.47.25, and then the futures closed at 44.48, and that's the last candle of the futures day, and that's the candle of the settlement. So you have to make sure you understand on TradingView, if you have the settlement price selected, it's going to use the settlement price for the daily, and that's typically what everyone uses. So you want to make sure you understand, if you got the settlement price turned off, you're not wrong. You're just looking at the actual futures day, and you're not looking at the settlement price, which, just about everybody uses the settlement price. So now that's your homework. Again, you're going to go through. Oh, and let me show you how to save your homework, right? For TradingView, the way that you say, let's go back down to 1 hour candles. For TradingView, the way that you save your homework, right, is very easy for TradingView. That's why I like charting with TradingView. Right. Stretch it out as big as you want it to look. Make it as big as you want it to look, right? So now that you got it the way you want to look, you want to come, you see it's a camera icon up here in the top right, there's a camera icon. If you click on that, it drops down the list. It says download image, copy link. What you want to do, you want to click on download image, right? And once you click on download image, what it does, it saves a picture of that screenshot in your downloads folder. And when you open it up, there's the picture right there. You saved your homework, and then you can just put it into a folder, for each day. And you can choose which time frame you want to. I chose the 1 hour because it lets me blow it up big enough to identify it. But since you're marking the open, high, low, and close of the New York, you may want to use the 15-minute charts. and it saves all of your objects that you put on the screen also. And that's the way you can save your homework, and you can also journal like that. If you, we'll get into journaling later, you know, but you can also add text to the screen and type like, you know, I am learning a lot. All right. And you can have text on the screen and all of that if you want to. And now if I save that, download that image, you know, it pops up another image over here. And if I open up that image there, I am learning a lot is on the screen. There you go. So thank you for tuning in for the first episode of Learning to Trade Futures with Lil Timmy Rogers. And I'll see you in the next episode. Be safe out here in these trading streets. Gone. Yeah.